Hey guys, I hope you are having a good week. This is going to be a shorter episode. To be transparent, I wasn't planning to release an episode this week. So I got my headset mic on. I don't have the big fancy mic, not doing an intro this week. Um, Partly laziness. I didn't think I was going to have to release an episode, I'll be transparent, but also partly to just make sure that we get to the meat of the update so you all can know what's going on. The reason that we are doing an episode this week is because there was a response to the lawsuit that was recently filed that we talked about in last week's episode from the Department of Education, and it lays out a lot of clarity as to how they are going to handle this upcoming period when it comes to accepting applications for income-driven repayment plans and the like. How they're going to give credit towards income-driven repayment plan forgiveness, public service loan forgiveness, so on and so forth. So I actually am going to, through this episode, just pull up the announcement itself. We're going to put a link to it in the show notes, and we're going to go section by section together to talk through what is up in the air and what has been clarified. So there is a section, if you're looking on screen, it says, how is the most recent court action different from previous court actions? And the first thing that they do is they lay out all of the things, and we may not even have discussed all of these things that are currently on hold as a result of the appeals court decision. Those include, but are not limited to, and I'm quoting, calculating a monthly payment amount using the save or revised pay-as-you-earn plan formulas. End quote. This is not a surprise to all of you. If you're on Save, you haven't been able to make a payment under Save because they are saying that the payment plan was too generous. So this is just saying that they are pausing the ability to calculate your payment under those rules. It also says they're pausing the applying of forgiveness or interest subsidies under the pay-as-you-earn, income contingent, or save plan. So an interest subsidy, we've talked about it in previous episodes, but it is essentially the federal government paying some of the unpaid interest on your student loans for you. They're saying they have paused those subsidies for those three payment plans. Next, it says determining when to include a spouse's information when calculating monthly payment amounts for income-based repayment, pay-as-you-earn, income contingent repayment, and save. This is a little deep, a little inside baseball, but prior to the previous administration's changes, what would happen would be that you could file your taxes married filing separately from your spouse, and you could exclude their income from the calculation of your payment, but you could include them as a person in your household when it came to calculating your federal poverty level. So you kind of got to get the best of both worlds. The change from the previous administration said that all plans, and that was the other thing, not all payment plans allowed you to do that. With the change from the previous administration, they had changed it so that you could exclude your spouse's income by filing separately, but that you also couldn't use them as a person for the calculation of federal poverty level. They're saying they are pausing that, which means that for the time being, they're going back to the original rule. They're pausing counting certain payments of deferment, forbearance as it pertains to the income-driven repayment plans. We've talked about this in the past. The previous administration set a rule that said if your loans had been in deferment or forbearance, as long as it wasn't in school deferment, for longer than certain periods consecutively or cumulatively, then anything above those allowable periods would be counted. But they're saying they've now paused that. The next is applying a weighted average of payments made on loans included in a consolidation loan to that consolidation loan. We've talked about this in the past. Prior to the previous administration, if you had, let's call it two different loans and you were consolidating those loans, maybe on one of them you had 10 years worth of credit towards income driven repayment plan forgiveness. On another, you had 20 years worth of credit and you're consolidating the two. Prior to the previous administration, you would lose all credit towards forgiveness when you made that consolidation. Whereas during the previous administration, they changed it so that it would be a weighted average of the forgiveness credits from those previous loans. Weighted average would be too much to go through on this podcast, but that was a change that they made in the previous administration. They're saying as a result of the court order, they have paused that and have gone back to the previous rule, which would mean that there's the possibility that if you consolidated a loan with various different credit histories, that you could potentially lose that credit until this is resolved. And then lastly, allowing defaulted borrowers to access the income-based repayment plan. We're not going to get too deep into that, but essentially, for people who had defaulted on their loans, it used to be that they had to consolidate their loans or they had to go through the process of something called student loan rehabilitation before they were eligible for certain repayment plans. That changed with the previous administration. They're saying that they're going back to the original rule, or at least I don't want to say they're going back to the original rule. They are not using the current rule until these things are fleshed out. Excuse me. The next session says the IDR application was temporarily unavailable. How does this affect my IDR recertification deadline? As you all are aware, they took down the application and the paper application from the website for people who are trying to apply for income-driven repayment plans, as well as people who are trying to consolidate their loans. What they are asking is, if I'm unable to apply for this plan, how do I go about the process of recertifying my income? This is something we talked about last week, where my concern was for the people who are going to be in a position where, because they can't recertify, their loan payment will default to the 10-year standard payment. Well, they break up their answer into two different categories, and they say, if your recertification date was on or before March 17th, 2025, you were due to recertify on or before February 20th. They're just saying that, like, if the date that you were supposed to recertify was March 17th or before then the latest that your loan servicer would have expected your like updated income information was February 20th. Now, if you're in this category, here are the three different scenarios. The first is if you submitted your recertification request on or before February 20th, which was the date that you were required to do it, and your servicer completed processing of your request, then there is no impact on you. What does that mean? It says they asked you to recertify your income. If you did it and they calculated your new payment, then all of this has nothing to do with you. You're just going to continue with your payment as is. The next category says if you submitted your recertification request on or before February 2025 and your servicer did not complete processing of your request, then your recertification date will be extended by 1 year. You do not need to submit a recertification request at this time. So if, for example, you submitted your information on February 19th, your loan servicer never processed it and never updated your payment, they're saying that they're going to kick the can to 2026. You don't have to worry about it this year, and you don't have to submit a new request. The next says, if you did not submit your recertification request on or before February 20th, then your servicer has temporarily recalculated your payment. This new payment amount is not based on your income and family size. You are still enrolled in an IDR plan. You must submit a recertification request as soon as possible to potentially lower your payment. So this is saying, like the group that I talked about, if you didn't recertify your income under these plans, then they will revert or they will kick your plan payment to the 10-year standard plan. So they're telling you that if you didn't do what you were supposed to do, then your payment has been recalculated and it's not based on your family size and income. So if you want it to be and you're making a payment you currently can't stomach, then the way to resolve that would be to submit a request and update that income. Let me turn on the light in this office. This is a real rough podcast episode, guys, but we want to make sure we get you this information. So, all right, that is the group of options for people who were supposed to have recertified their income already. Whether you've done so or not, you either are going to keep your payment as is, they're going to kick the can down the road another year, or if you didn't do what you were supposed to do and your payment has ballooned, they're giving you the option of submitting an IDR request. The next section says if your recertification date was after March 18th, 2025, and you were due to recertify after February 21st. This is the group we talked about where they are extending the period before you have to recertify to at least February 1st, 2026. So if your recertification date for this year hasn't happened, maybe it's in July, they're not even saying that February of 2026 you'd have to do it. They're saying that you won't have to do it till next July. So this is where we talk about the importance of knowing your IDR recertification date. It will give you an idea of when you will have to recertify that income. In a perfect scenario, your recertification date would be like, December, because that means that you wouldn't have to do it until December of next year, and you can keep your payment as is for that current period of time. Now, in the previous section, we talked about them saying if you want to recalculate your payment, then you can submit an IDR plan request. that would imply that they have opened up the applications again for income-driven repayment plans, and they actually have. If you go to the site, they've opened it up so you can apply for those plans again. However, they have clarified that they are not processing those applications right now. So you can submit the application, they will have it on file, but until there's more clarity from the courts, which to me is a bit of a cop-out, they're saying that the student loan servicers are just going to sit on those applications. They also said that they will alert borrowers when processing will resume. So the application is back up. You can go and you can apply. They're not going to process it right now. Hopefully they stay true to their word and let you know when that processing will resume. But as of today, you can go to that site and you can once again apply for an income-driven repayment plan. Now let's go to the question and answer. This is going to be a little rapid fire because there's a bunch of question and answers. It says, I'm enrolled in the SAVE plan. What does the court's injunction mean for me? It means, in terms of what they put on this site, that you're in general forbearance. We've talked about this ad nauseum. If you're on the SAVE plan, you are not going to see any interest accrue on your debt, but you also are not going to get any credit towards public service loan forgiveness or income-driven repayment. General forbearance does not provide credit towards those things. Now, the next is, and I'm going to skip around a bit, it asks about if you are going through the process and they're sitting on your consolidation request or your income-driven repayment plan request. We talked about the difference between general forbearance and processing forbearance. And it says if you are in processing forbearance, then for up to 60 days, that status of processing forbearance will be eligible for public service loan forgiveness and income-driven repayment. So if you submit that consolidation request and it takes them 5 months to honor that request, which is an extreme scenario, hopefully for at least 2 of those months, even though you're not making payments, you do get credit for those 2 months for public service loan forgiveness and income-driven repayment. That is especially important to understand for those who might be eligible for like public service loan forgiveness buybacks, where once you reach the 10 years credit, you can go back in time and apply for any months that you could have gotten credit for. That processing forbearance is something that's crucial to understand because you may be able to pick up 2 extra months out of the 120 that you need before it is forgiven. Next question says, is the Education Department processing income-driven repayment plan forgiveness? And it says, and I quote, forgiveness as a feature of any IDR plan created by the Department of Education is currently paused. Those plans include the SAVE plan, which was formerly revised pay as you earn, and income contingent repayment. So they are saying flat out, we are not processing forgiveness if you're on one of these plans. However, they also say that if you reach your 20th or 25th year, whichever is required under that plan before it's forgiven, they will move you into forbearance. So you won't have to worry about making additional payments. They're just not going to forgive it under that actual plan. Now, they also verify that they will still process loan forgiveness for income-based repayment because that plan was created by Congress. And they also state that if you accrued credits for forgiveness on any of those other payment plans, even the ones that they won't give forgiveness for, those payments count towards income-based repayment plan forgiveness. So they're telling you right on paper or on the internet that if you get your 20 or 25th year under a plan that doesn't count or isn't eligible for forgiveness, you can switch to income-based repayment. You will retain all those credits and they will forgive it under that plan. So they're kind of giving you a loophole in the announcement that you can take advantage of if you have been harmed by their current stance. Next, it says, is there any way for me to receive credit towards public service loan forgiveness at this time? And really the only options that they give you is you can enroll in a different payment plan. So if you're on SAVE, they're telling you can enroll in a plan that even though it doesn't give you forgiveness under the plan itself, is still eligible for public service loan forgiveness. So for example, pay as you earn and income contingent repayment, while they won't forgive your loans under that plan, they are eligible plans to participate in public service loan forgiveness. So you could switch from SAVE to pay as you earn while you're pursuing those 10 years and still have your loans forgiven under those options. They also give you the option, and to me, this is crucial. They give you the option of pursuing public service loan forgiveness buyback credits. Now, we've talked about public service loan forgiveness buyback credits in the past, so you're probably wondering, why is this such a big deal? It's because, to my knowledge, This is the first time that the Trump administration is actually touting the potential benefits or even mentioning the option of public service loan forgiveness buyback credit. To me, that's huge because we have been sitting here wondering if they're going to attack this program or eliminate this program. And instead of eliminating it, they're actually giving it as a potential option to people who are pursuing public service loan forgiveness. Now, does that mean that they might not change their mind a year from now? No, it doesn't mean that. But to me, this is wonderful news for people who are saying, man, I can go back and buy 2 years worth of credit, but I'm trying to get to that 10th year as fast as possible before they do away with this program. This, at least to me, provides a glimmer of hope that the public service loan forgiveness buyback program may be here to stay. Next question says, does the most recent court action affect only the SAVE plan, or does it also affect the IBR, pay-as-you-earn, and income contingent repayment plans? We've already answered this. This court action impacts every payment plan that was created by the Department of Education, and that is every payment plan but the income-based repayment plan. The next says, what is happening to the interest subsidy if my monthly amount is, so I won't go through the whole question, but this is important. It says, due to the court actions, the only IDR plan for which the interest subsidy can be applied is the IBR plan. It is applied only to subsidized loans in the first 3 years of repayment and covers 50% of the unpaid interest each month. It's a lot of, student loan mumbo jumbo. What is important to understand is if you are not in forbearance under all of those income-driven repayment plans, there was some method of, if you had interest that your payment wasn't covering, the government stepping in to cover some of that unpaid interest for you. What they are saying is for any plan that was created by the Department of Education, even though those plans come with interest subsidies, they are not paying that interest for you. That's also the first time, and I could be wrong. I've told you there are people in this space who are more up to date on it than I am, even though I'm relatively up to date. But this is the first time I've seen, without reading the actual ruling, that they're just not covering that interest, even for the subsidies that are written into the language of those payment plans. And then the last question says, well, not the last question, there's two. There's the second to last question says, will income-driven repayment plan forgiveness affect my taxes? We've talked about this in the past. If your loans are forgiven before January 1st, 2026 under income-driven repayment, there is no tax implication at the federal level. Now, at the state level, some states will still tax forgiven loans as income. So in an extreme example, let's say that this year somebody has $300,000 of student loans forgiven. They would not owe any federal taxes as a result of that. But based on the laws of their state income tax return may make it look like they earned an additional $300,000, which could lead to a very big tax bill that would not be expecting. Prior to this change, which has existed since December 31st of 2020, we used to talk a lot about the potential dangers of having a tremendous amount of student loans forgiven. It hasn't been something that we've had to discuss in a long period of time, but that window is closing where if Congress does not extend or make permanent this current state of affairs, then we may be back to the era of having to plan for the taxes that are associated with student loan forgiveness. So if it's forgiven before January 1st, 2026, don't have to worry about it. The hope is also that Congress will extend this period or make it permanent. But if they don't, then loans forgiven after that period of time under income-driven repayment plan forgiveness could be taxable at the federal level once again. I will remind you that for student loans forgiven under public service loan forgiveness, there is no taxation at the federal level, no matter what. So even if it's post 2026, there are no federal taxes on loans forgiven under public service loan forgiveness. The last question, which the answer is a bit lacking, says, can I escalate my forgiveness timeline? Unfortunately, they say right on the paper, there is no process for borrowers to escalate their forgiveness timeline. So I know that was a lot. I know that was rapid fire. Maybe could have benefited from a commercial break in the middle, but I told you we're doing a little bit of a rough and tumble episode this week. But to me, the highlights are the income-driven repayment plan application is back open, even though they're not going to process it right now, but you can still benefit in some cases from getting that application on file. Another big one is they're saying that there are certain things like the rules related to consolidated loans and things of that nature are on pause till the court ruling. They also are mentioning the fact that the public service loan forgiveness buyback credit is an option for people who are being harmed by this time or missing payments, which, as I said, is a big deal for this administration to tout that as a potential option. And then I also think it's a big deal, especially if the forgiven loans end up being taxable again, that the interest subsidies for those education department created plans are not currently being followed. That to me is potentially problematic for someone who is watching their loan balance increase and post 2026 could potentially have to pay income taxes on those forgiven loans. We'll keep our eye on that development as we will with all of these developments. I will also tell you before I let you all go today that we earlier today recorded our first session with a member of our community who wanted to be recorded on the podcast in exchange for a free consultation on their student loans. It went extremely well, so we'll have that coming to you in a couple weeks, if not next week. And again, if you want to have your student loans considered, you can go to escapestudentloandebt.com/review. I will say, I shouldn't have been surprised, but we've gotten a lot of people who have submitted their requests to have their student loans reviewed under that option rather than having to pay a consultation fee. We can't review everybody's loans in transparency. We'll likely review the ones that have things related to the loan repayment strategy that would be beneficial for our audience. So the more straightforward your loan repayment strategy, the more unlikely it is that we review it, but we will make sure that we provide some episodes that will be helpful for you all. Just want to make sure that we're transparent and letting you know that not everybody who submits will be chosen, but we still encourage you to submit because we think that we can add some value to our community with these upcoming episodes. I will see you again, maybe next week, maybe in 2 weeks, but unless there's any major news, that next episode will be our first review with a member of our community. Talk to you then.